Hey everyone, Ian King here, and welcome to the weekly episode of Market Insights. Joining me this week, I've got Mike Carr, editor of Precision Profits and Peak Velocity Trader. Mike, how you doing?
Great. How are you, Ian?
Doing great, thank you. Now, for the next couple of minutes, we're going to be talking about the hot IPO market and the new Facebook coin that's called Libra coin. But before I get into it with Mike, I want to remind you to subscribe to our YouTube channel, please, by clicking the button down here, the subscribe button. And if you like the content here, you can always give us a like, or if you have any questions about anything we've said, please leave a comment here in the comment section below this video. So, Mike, let's get into it right now. The IPO market, it's all over the newspapers. I turn on CNBC, and there's always this new hot IPO that's happening right now. I want to pull up this table for our viewers right now. And what I want you to look at is the number of IPOs in the US from 1999 and 2018 to the last couple decades. And you can see, you and I lived through what happened in 99 and 2000. I don't know if everyone was around for this, but that was really a dot-com boom. We had IPOs going like crazy. And we really haven't seen those type of IPO levels for the last 2 decades. Now, the pace this year isn't quite like it is in 99 and 2000, but it feels like the mania is starting to bubble a little bit. What are your thoughts on that? And what does that mean for the overall market?
I think a lot has changed, as you know, over the last 2 decades, and companies are staying private longer. In 1999, Uber would have come out just with a business plan. They wouldn't have even bothered signing up drivers. And I think that's the difference. In 99, you didn't need revenue. Now you need a lot of revenue to go public. And venture capitalists are sitting on a whole bunch of money that they want to put to work. So they're kind of discouraging companies from going public right now.
Yeah, I agree. And on that note, in 1999, there was an IPO called Pets.com, as you might remember. And recently we had Chewy.com go public. And you know, I've got 2 dogs, and my wife lives on Chewy.com. They've actually have revenues. They reported, I think, $3 billion in revenues in the last year, as opposed to Pets.com that was in the hundreds of thousands when it went public. So yeah, I agree. Different type of companies right now. It's just not just a business plan. They've been around for a decade. That's a great insight. But what do you think this means for the overall market here in the kind of medium term? Do you think this is going to add more fuel to the rally, or do you think we'll see some type of correction at some point later this year because things are kind of overheating in the IPO markets now?
I think, yeah, eventually it will lead to a crash, but not anytime soon. If you look at money market funds, there's over $3 trillion sitting on the sidelines right now. And these stocks are simply pulling some of that money off the sidelines. They're not impacting the rest of the stocks that are trading. So right now, there's a lot of fuel waiting to be added to the bull market.
Yeah, I agree with you. You know, I wrote something about this in April after the Lyft IPO went public. And what I said at the time was all of Wall Street and all the research community thought that after the Lyft IPO failed, it went public at 72. I think it opened at 90 and then it traded down below its IPO price. Everyone said the IPO market was dead. Well, what happened was you just reset everyone's expectations. So the syndicates that are pricing these new IPOs know that they have to keep the price levels down because they don't want to look like, you know, the deal fell apart. They want to get that pop right after the stock starts trading. So I think we had a kind of a psychological shift after Lyft. It felt like we threw the maiden in the fire. You know, that was the sacrificial lamb, and now we're off to the races with everything. So, yeah, I see this IPO market continuing throughout the rest of the year, and not like we're going to have the same number of IPOs, but we're just getting bigger ones right now. If you look at Uber, if you look at Slack, they just went public at a $15 billion valuation yesterday. I know we've got Airbnb, perhaps WeWork at some point this year. I mean, these are $15 to $20 billion companies that are coming public, and it's not something we've seen for over a decade.
And we've never seen this much money waiting to be put to work in the market. So it can absorb as much supply as companies have in the pipeline.
Okay. And speaking of money, Mike, I want to turn to our next topic, and that is the new form of internet money that Facebook just announced recently. Now, Facebook created this coin called the Libra coin. And what it is a cryptocurrency, but it's not really decentralized like Bitcoin is. It's backed by a consortium of companies that includes American Express, MasterCard, and PayPal among them. And what they've created is not like a speculative cryptocurrency, but what it's called is a stable coin. And every Facebook Libra coin that's in circulation will be backed by a US dollar or a currency in a bank somewhere. So it's going to act more like a stable coin where it's not as speculative, but it's something you can move back and forth. What are your thoughts on the Facebook coin, Mike?
Yeah, I think this is going to have a huge implication for market structure that we don't even begin to understand yet. Even before that IPO boom in the late 90s, ETFs started trading, and we didn't understand what ETFs were at the time. Turns out they added a great deal of liquidity. They added tax efficiency to the market. They did wonderful things for stock market trading, and they also helped boost high-frequency trading when it was time for that. So that's where I think Libra is headed. It's going to change the market structure of cash as well as cryptocurrencies.
Yeah, really interesting. And I want to just note for our viewers that there are 2.3 billion monthly active users on Facebook and only 40 million Bitcoin wallets out right now. So if this brings more cryptocurrency people into the fold, that's going to be a big news for Bitcoin. And you can see the price has already tripled this year on this Facebook narrative alone. One thing that I find kind of funny and I chuckle about is that if you know, Facebook was founded by Mark Zuckerberg, and the idea was that the Winklevoss twins came up with Facebook first, and the story is that Mark Zuckerberg stole their idea, then they sued in court. Mm-hmm. Well, the Winklevoss twins, if you didn't know it, moved on to Bitcoin years ago. And they were early investors in Bitcoin, early adopters, and I think they took a lot of their settlement money that they got from the Facebook lawsuit and built an exchange called Gemini. And I just find it so funny that Facebook coin, which is going to crush the Gemini exchange, is called Libra. I mean, it's almost like, you know, they intentionally called it an astrological sign because they wanted to take a kind of a shot at the Winklevoss twins with their Gemini exchange. So I found that to be a little bit ironic and funny at the same time.
Yeah, I think there's a lot there to how the billionaires have big egos in that particular arena. And there's no doubt this is a shot at the twins because Zuckerberg ended up paying them about $65 million. As you said, they took a bunch of that cash and put it into Bitcoin and other cryptos. And they also made the settlement include some shares so that they were going to ride along with Facebook as it got bigger. So undoubtedly bad blood there, but it's going to benefit us like these battles invariably do by creating new products and new markets.
Sure. And I would note that they still own more Bitcoin than Mark Zuckerberg. So if Bitcoin goes up significantly from here, maybe someday they'll be wealthier than Zuckerberg himself. So let's leave it on that note. I want to thank Mike for joining us this week. Thank you for tuning in to the Weekly Market Insights podcast. Any other questions, please leave them in the comments for us, and we'll talk to you next week. Thanks a lot.
Thank you.